I feel like people are so stuck in their ways, especially once they kind of figure out what's working for them. Like, I am a short seller. I'm a day one short seller. I am a long bias trader. I only buy breakouts. I only buy backside bounces. It's very important to know when you should be there and when you shouldn't. And what I've realized, having studied so many daily charts over the period of 8 years, that there's the majority of time during the stock's life cycle, I shouldn't be pushing buttons. I shouldn't be in the trades. I mean, look at SOUN now. After having it be in our life and be the top watch for everyone long and short for a couple weeks, they all end up in the same place. What's going on, guys? Welcome to another YouTube video right here on the Clover Trading Channel. My name's Dom. This is Mike Huie, and today we are going to do a little video about how to spot a no trading day. I think so many people are convinced that you have to trade all the time, from the time the market opens to the time the market closes, maybe even into after hours or pre-market, that there's always a trade to be had. There's always something you should be doing. We're here today to tell you that that's not necessarily the case. I think there's a lot of people who can do that or will do that or have so many different systems because they've been trading for so long that they do have opportunities that come up all the time. But the market is constantly changing, especially where we trade in small caps, to where there is a lot of days, like the majority of days, I would say, over the course of a whole year, where there is no optimal setup, and that's usually where money disappears.
One of the nice things about having Dominic and I here is that we would say you're predominantly a long bias trader. I would say that I'm predominantly a short bias trader, and the same qualifications for a no trade day for a short seller and a long bias trader, they're going to be different. It's going to, change which bias you are predominantly and which setups within that bias that you're going to trade. So Dom, why don't you take it off with, just you're long biased, you like breakouts. So what are the key tells for you when you have a market or when you don't have a market or where there's no trade?
Yeah, I think most people, once you've been trading a few months, you start to get a good grasp on which markets are better for your setups. There's no indicator for me necessarily. Like, sometimes the SPY can be an indicator, or the overall indices if they're super red for a week or super green. But it really just comes down to how often is the setup showing up and what are the results. It's not hard for anyone, even if you're not tracking, which we really encourage that everyone be writing down every single trade they take, finding out some data about yourself and your performance. But we just exited, I feel like, a month-long stretch where breakouts worked. And everyone was talking about it, right? You had stuff actually running for multiple days, consolidating, and then going higher. And it doesn't take a rocket science to figure out that that is the type of market in which I want to be looking to buy early, find my death line, my risk level, and build into a winner. But there's certain markets, like it feels like right now, where that's just not working. Stocks are going up. They gap up on news, they just get running from not really that much of a gapper, but just run on earnings or some other catalyst, and they come right back down, or they start to consolidate and then break down. And those are markets in which I want to be pulling back and relaxing. And even during stretches where the market is good for any one pattern, whether it be first red day shorts, buying bounces, breakouts, I feel like every week there's like 2 days and maybe sometimes one where you're supposed to make money. That's where you're supposed to make your week, right? 1 or 2 really good setups every single week. And your goal is to, on the days when that's not the case, is to lose the minimum, lose the least you possibly can. That's why I remind people every morning on Good Morning NASDAQ to make your watch list in advance. Get up early, make your preparations, your plans the night before. Prepare your mind for the possibility that there might not be a setup tomorrow. Because if you already go into it with the expectation that I'm not going to trade, or I'm not supposed to trade, or it's very unlikely that I'm actually going to find a good setup tomorrow, you already prepared yourself for a potential 0 day, not making any money, not losing any money. And I think so many people who, when they show up to the market with no plans to trade anything and end up having a negative 3, 4, 5 hour day, really wish that they just had not done anything. I know you guys can probably relate to that because it's so true. We've done it before, especially short selling.
Ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
I remember TOP that morning very vividly, where we spoke on the phone. I said, there is nothing for me to trade today. I'm not doing anything. We're about to get on a plane the next day to come to meet up for Clover. And before you know it, 60 grand has disappeared. And that comes down to, having the discipline to take time off when there's not your setup.
That we really went down that dark memory there.
Yeah.
What's important is watchlist building. It's kind of that skill and that craft that you have to hone in at a very early time in your career, because that is going to be your guide. Your watch list is going to tell you exactly what you're set out to trade tomorrow. And you know that if you come to the next day and your watch list isn't built out, and all of a sudden that shiny nickel shows up on your screen and you start formulating plans on the spur of the moment, like those are probably the most dangerous trades, because you don't have a lot of time to prepare and plan about, what size you're going to take, what's your risk levels, how do you expect it to go down, do you expect it to spike, all these like predestined thoughts that you can have that before when you build that watch list. So that's really important, especially to the long side and even to the short side, right? Like usually it's not stock PRs and all of a sudden there's a setup. It's usually like stock PRs, wait a couple days, fight out the players, and then formulate a plan based off support, resistance levels, and price expectations based off the range of the stock and what you already know about it. It's really hard to have all that information on day one. So, and whether you're long or short biased, a lot of the, multi-day charts are some of the best setups that you're going to see in the markets. Same exact thing, like, for a really extended stock, sometimes it happens in 1 day, but most of the time it's not all in 1 day. It's like to get really extended to really be relatively increased range, increased volume, and have that information, you need to give it a day or 2 or 3 days from the initial start of the move. Long or short, you're going to have that watch list building skill, and that's really important in order to depict whether it's a no trade type of day, because your watch list will tell you. You'll have nothing.
And I think that's what I see the most from beginners. And, we see it in ourselves. We're really transparent with ourselves about when we're kind of starting to lose grip of that. Like you go through stretches where you're trading really well, you're only taking optimal trades. And then like for me last week, you start to just drift little by little. You take a random trade here, random trade there. All of a sudden it becomes commonplace. Like it very quickly can become a habit and a negative habit in trading. But so many beginners, they know the patterns. They know when they want to trade. They know if they're long or short bias. It's just those days when they're bored, those days when they've committed, I'm going to trade from 9:30 to 11:30 today, then I have to go do my other job or go do something with my life. And so they set this time aside and they have to trade. They feel like they're wasting their time, wasting their money if they don't push buttons. And that couldn't be further from the truth, because most beginners, they know how to spot an A+ setup and they usually have enough of an idea to make money on those trades. It really comes down to, in the market, like what do you lose when you're wrong and how often does that happen? And what does it correlate to your winners and how often that happens? But really, what do you do when there's nothing to trade? Because in a nutshell, that really is what happens with unsuccessful traders. Is they wouldn't be around for a year or 2 years or 3 years trying to learn if they weren't making money at some point. If they didn't have a big trade, if they didn't have stretches where they were doing well. It's what do you do when there's nothing to trade, and how do you recognize that? And I think you bring up a great point. And for me, that's why it's one of my biggest handcuff rules for myself when I start to slip is if it's not on my watch list, I'm not allowed to take the trade. Because if you're a short bias trader and you're looking for extended stocks, overextended stocks to have first red day shorts on, and you go into the night you make your watch list and there's nothing, where are the plays that you're going to find yourself in if you don't follow your rules to chill out and not take trades? You're going to be shorting random parabolics. You're going to be shorting not extended runners. You're going to be maybe shorting the hottest stock of the day with no system or idea for it. And that's when you can find yourself losing the most money, the most consistently, and you can't buy a win. It's because you were supposed to not be traded.
And so what I think is interesting is whether you're long or short biased, like a slow day for a short bias trader is a lot different than a slow day for a long bias trader. Just the week we just had, right, is a very slow week for any long bias trader. But if you're a short bias trader and DXYZ, sets up the way it is, like that is the most happening day. And maybe you're not pushing a lot of buttons that day, but that is definitely a day to make a lot of money when you have such a setup. And it kind of speaks a lot to the framework and understanding like how stocks move, because usually, extended stocks, they start out as breakouts. The best first red days come from breakouts. They come from very powerful moves that go very, very far. And then, you have a situation where a stock goes too far and it's going to revert back to the mean, so to speak. What's interesting is, a slow week for a long bias trader is not necessarily a slow week for all traders. It's just really particular to A, your bias, and then B, what do you trade? And whether you trade long, short, or both, I think it's a skill to try to at least learn how to trade both. I think it's really important, but at least identify where we are in the cycle. Identify, what's working and what needs to be worked on and what needs to happen before another pattern shows itself.
Yeah, I encourage everyone, because I feel like people are so stuck in their ways, especially once they kind of figure out what's working for them. Like I am a short seller. I'm a day one short seller. I am a long bias trader. I only buy breakouts. I only buy backside bounces. I call it the life cycle of a penny stock. Like the time frame when the stock gets on our radar, starts trading significant volume relative to the rest of the daily chart, has increased range, increased volatility, to the time it starts its descent into nothingness. Like they're only usually here for a couple days to a couple weeks. Look at SOUN now. After having it be in our life and be the top watch for everyone long and short for a couple weeks, they all end up in the same place. And there's only a short period of time in which we're trying to use our edge to make money and pull money out of the markets from these particular plays. But I encourage everyone to learn everything, like you said, because it's very important to know when you should be there and when you shouldn't. And what I've realized, having studied so many daily charts over the period of 8 years, that there's the majority of time on these during the stock's life cycle, I shouldn't be pushing buttons. I shouldn't be in the trades because there is no edge for me, long or short. Especially in the beginning, I feel like so many people start long biased, and so they look at everything through rose-colored glasses. There's always going to be a short swing. Everything has to go higher. Why? Because they can only have the buy button. They don't have the short button. And so you see people trying to buy first red days. And oh, they're going to get squeezed. Oh, it's trapping. No, it's just having its first red day. And if you could short, I'll bet you'd view it that way. And so if you're able to understand every part of the move and what you're supposed to be doing at each part of the move and only trading that bias, these patterns have statistically proven to work over a very long period of time. It's again, when you start to go off script to do things on the wrong days that you start to lose money and lose it consistently. And if you let it get bad enough, it becomes a drawdown or a period where you're red for a while.
I think the first step in identifying, how to spot a no trade day is really identifying the day that a stock becomes interesting, the day that the stock has interest, which is usually followed by big volume and a really big percent gain, and allowing that stock to live its best life until it becomes something that we can actually trade and just keep it on watch. But there's often times where that's not happening. That simple fact of a stock being of interest, a stock having any kind of properties that is attracting the crowd, that doesn't exist some weeks. In 2022, it damn well didn't exist the whole year.
Yeah.
And most days I came to the market and I was bored. I truly didn't have anything to trade. It was very hard to make money in those markets because there was no players, no demand, no interest. So it all starts with the watch list. It all starts with knowing the framework, and it all understands why are we interested in small cap in the first place? It's not to trade every single one. It's to trade the ones that are the most attentive.
Yeah, I think it's realizing that small cap is the wild, wild west, and there is stuff moving nonstop. Doesn't matter if the market's getting crushed or the market's going up consistently. There's always something, some flashy object to watch, whether it's a hot gapper of the day, a crazy runner like a DXYZ going from 20 to 100. There's always something. And learning through back testing, through studying mentors, through looking at past examples, finding out the moments when you truly need to be there for the stock. You rarely ever finish a month and go, I wish I traded more. I wish I pushed more buttons. You almost always end up regretting all the extra things you did that were unnecessary. And becoming a really profitable trader, I think, starts with consistency, but it's consistency in that approach of knowing when to turn it on, when to turn it off, or even just pull back a bit. Because if you can get really good at being particular and making more money off less trades, that's the recipe for longevity.
That's well said.
All right, well, that is the video for today. Make sure that you hit that thumbs up button, that you subscribe to the channel, and leave a comment if you learned something or if you have any questions or thoughts for future videos. Thank you to Huie. Thank you to me. Appreciate you guys, and we'll see you in the next one.